Hey traders, Jeffrey here from Strategic Day Trader, giving you a quick recap on how we did this past week. Glad to be back again with you guys. Hopefully, those of you that are in my private group are taking advantage of looking at these charts and taking some of these trades. We had a good week, and before we get going, let's go ahead and read our disclaimer. All the information provided here is for educational purposes only. I'm not a financial advisor. This is not an offer or a recommendation to trade futures, stocks, options, or Forex. So here's how we did this week. Number one, it was a short week. As you know, Monday was a bank holiday, a legal holiday in the U.S. and in Canada. It was Labor Day. So there were no trades that were posted on the Telegram channel on Sunday evening Eastern. Going into Monday, the analysis was thin as the market was kind of bracing itself for some bigger news later in the week. And so, excuse me, and so Monday was a relatively quiet day. As you can see, we didn't even get an opportunity to enter on two of our trades. One of them, we were stopped out for a relatively small amount, and we took a little bit back on the fourth one. So Monday was almost a bit of a wash. So for a total for the week of almost 700 total pips, that was only in 3 days. So we did have some really good calls. Let's go ahead and review what we had this week. If you'll remember, we were going into inflation and GDP as well as jobs in the beginning of the week. But later in the week, the big call was on Friday. And so the market really kind of took a pause or a breather going into the U.S. employment rate. That we know was going to be a big deciding factor for the Fed, and so a lot of eyes were on that. If you remember, if any of you were watching the charts on Friday morning Eastern time, just before the New York session, the volatility was outrageous, okay? We were happy to get in and out of our trades way before the release of that report. Okay, so now to review, those of you that are in the Telegram channels have seen the posts that I put out after analyzing the currency strength, the news of the day, the news that's coming up, all of the global events. I spent an hour or two after the New York markets close to get a bias among the 28 major and minor pairs and give you my highest confidence level of which ones will go long or short over the next 12 to 24 hours. Very often, these play out very quickly in just a few hours. So in conjunction with the bias, we are looking at the parabolic price action strategy that I use and have used for quite some time. And I am always looking to wait for an outside bar if I'm going short on the high side or if I'm going long on the low side. Those of you that have a chance to get into my live sessions, you'll see me go into some details, setting up the indicators on the charts. And for those of you that haven't had a chance to see them, just go to the website. If you click under member and live sessions, even if you're not a member, those are unlocked. So you can see the recordings of the live sessions that we have. But what we like to do is either enter directly at the market when the call comes out, or if you see supply or demand zones in spots that you can trade off of, for example, this supply zone right here, if the call came out right over here, it would have been really a better opportunity to enter with the bounce short over here and then take it right down. If you entered here, you still did fine. And then going further down, we might have been able to track this. We look to put our stop losses on the opposite side of zones. So if we're going short, we're going to put our stop loss clear on the opposite side of a big supply zone, and vice versa for a demand zone. And those of you that have the ability to place multiple targets with one runner or two runners, we're going to trail those runners either by price or by attaching it to an indicator, or manually if you've let the trade run and it hasn't closed, by the time you're back at your computer. By all means, you can trade it manually by pulling it down and putting it behind the close of the previous one or two candles, and any other strategy that you're looking at. Let's go ahead and take a look at the charts. Hold on, let me get the week's trading up. So here is the Monday trades. As I said, on the 2nd, this is there were no calls on Sunday going into Monday. This is Monday going into Tuesday, and we had no entry at all. This was a long, and it just took it right down and was clearly oversold for quite some time. Had a little bit of bump over here. Potentially, if you were looking at this, you could have seen the parabolic movement. But this was not a trade that I took at all. It was counter our bias. The next one was also a long, also straight down. We did get into our call over here, and we're quickly stopped out for 25, 30 pips. Same thing, we shot right down. So, and if I'm not mistaken, a lot of the issue here wasn't some unexpected news out of Japan, which kind of sent the bias upside down, which absolutely happens. For the most part, it's pretty predictable, but as you know, with global events and news reports, anything can happen. And lastly, we did do okay for a few pips on this long. The overall bias call long really didn't play out if you look at the rest of the market, but we were able to catch our entry and a quick exit for a few pips to make up the difference. And let's take a look at the next day. Now this is Tuesday going into Wednesday. If you take a look, we were short in bias for all 6 of these trades, okay? We got our pullback, pulled it right down, got our target, and a little bit of a runner. Easy peasy. If you were, if you're over in the London session watching your charts at your monitor, you could have ridden this all the way down. Okay, same here. We got a little bit of our bump right to our entry, took our target, got out at our runner before we had a move back up. Still clearly far from our stop loss. Okay, but we were able to get a few points and ticks out of that one. Same here, our short call, the bias was great. We got in and we got out right away, but this ran all the way down. So plenty more pips where this came from. You can see how important it is to judge and analyze these currency pairs in order to get the bias straight first. That is what I spend the most amount of time on. Same thing here, we got our entry, quick target, quick runner close before we had a turnaround. And on the CAD JPY, beautiful run all the way down. We got our entry, we got out. There's our runner, our second target, and then if you were at your computer, you could have ridden this all the way down. And lastly, our bias did give us a few pips over here, but for the most part, the CAD CHF was pretty flat, but we were able to catch our quick rundown and our runner. Now let's look at, this is Wednesday going into Thursday. And as you can see, huge downward bias. We got in on our pullback and rode it all the way down to the outside on the envelope. And pay special attention. These oversold, overbought, oversold conditions, clearly at the spot where we want to get our pullback entries, really tell the whole story. When they line up close to the outer edge, overbought, near our pullback, close to a supply zone, that's a spot to get right in and ride it down close to the opposite edge or the opposite end of the channel. And sure enough, we're beautifully oversold at that point. Tells us definitely get out. If you are greedy and you figure, okay, I see that it's oversold, maybe it'll keep going, take a look what happened to you. You would have gotten taken right out and given it all back. So that's why I put those high probability targets to get out. We want to just bank a clear number of pips over and over and over again, okay? Same thing, we got our pullback, we got our target, and we were out. could have ridden this one all the way down. In this case, this definitely played out. It was oversold, stayed oversold all the way down through the London session. So you could have ridden this one all the way down. In this case, same here. We got a pullback. Took a little while for us to get our pullback, but if you place your trade with a limit order and just wait for it and trust that the bias calls are on the money for a very high percentage of the time, you're going to do just fine. Just let it run, and it'll take you right out at your high probability target before it has a chance to reverse. And lastly, going into Thursday, going into Friday, this was such a tricky day because the markets, if you'll see, stayed relatively flat in the London session, waiting for this 8:30 a.m. Eastern time in the U.S. jobs report. Now, as many of you know, there are almost weekly jobs reports, but once a month, on the first Friday of the month, there's the monthly jobs report and unemployment results. And this one is in advance of the Fed meeting that is coming up in a couple of weeks, where the Fed was looking for one final piece of data. We'll actually get some CPI and inflation data this week coming up, but they're more concerned with the labor market right now to determine whether or not to drop interest rates by a quarter or a half point, okay? That's what we're looking to determine. And as you can see, huge volatility, up, down, back up, back down, okay? You've got a movement that is just astronomical. So I wouldn't want to be in anywhere close to here, and then perhaps ride it and take this trade a little bit afterwards. And on the Euro CAD, we had a nice move up, actually got about 60-70 pips because we got our entry right in over here, and we were able to get a quick move back up. Same thing here, we got our pullback entry, wrote it up well before that report came out. And on the New Zealand dollar and the US, here's our, here's our entry, pulled it back up. Now, very important, okay? Be careful not to be too strict, as we were overbought over here when we had the call, when we were looking for a pullback right down here. We were just about at the oversold spot, but that was more than enough to line up with the trade and ride it right back up to being overbought, okay? So we get into our oversold spot and overbought, okay? When everything lines up and it's an outside bar and it's oversold or overbought, okay, that's extra confluence. But for me, having it overbought or oversold, so long as you've taken a reasonable move to the other end of the channel, that's generally enough. And then pulling up the rear, we had another nice move down over here that we were able to capture. And then lastly, well before the report came out, we were able to pick that up. So as you can see, guys, the bias is the most important thing to find first. Then using the parabolic nature of the movement of currency pairs, we can capture a move from overbought to oversold and vice versa, from the outer edge and outside bar or right at the edge of the channel to the opposite edge, over and over and over again. Now let's see what we've got coming up this week. It is a relatively slower week. If you remember last week and the week before, there were twice as many high impact reports. But here, absolutely nothing on Monday. So Monday will be a quiet day. We may not even have any high confidence trade calls coming out tomorrow night. And on Wednesday, we've got UK GDP coming out and US CPI coming out. So Wednesday, we'll have some information. And for those of you that are trading, watch out. GDP comes out at 2 a.m. Eastern time. Okay, that's because of the time difference between the UK and the US. So make sure that you're being careful and putting your stops and your limits in. And then going into Thursday, more inflation news for the US, the PPI results. And then for the Eurozone, we've got on Thursday a press conference by the European Central Bank. So some high impact reports that are going to affect how I look at the currency pairs and put together my analysis, okay, but not too many. And that is about it. That's a wrap. So hopefully everyone that's had a chance to take a look at some of these videos and recaps, you've been able to follow what we're doing. If you have any questions, feel free to send me an email. If you're wondering what the group is like, how to join, what membership is, whether or not there's any promotions going on, please get in touch with me. If you want to just go ahead and join, if you've been watching for a while, go to strategicdaytraders.com, click on the join button, and you can get right into the group. And then it'll lead you through how to get Telegram on your either phone or computer or both. And that's where I exclusively post these encrypted leads and Forex signals for you to look at and analyze and make your own choices when and how to enter. And I suggest using the strategy that I feel very comfortable with, the parabolic price movement strategy. You may certainly use additional strategies and indicators in your trading, but the most important thing is analyzing the charts, looking at the world events and the econ or economic news reports in order to get the bias over the next few hours or 12 to 24 hours in order to maximize and give you a real edge in your trading. So good trading, everyone, and we will see you in the next one.